Hey, it's Carol and Tim.
And we have something new and exciting for you.
Everything you love about Bloomberg Radio is now in your car.
The new Bloomberg Business app, now featuring Apple CarPlay and Android Auto.
Listen to your favorite Bloomberg radio stations anytime.
Plus, every Bloomberg podcast, the latest news and more, all at the click of a button.
It's free and simple to use. Just download the Bloomberg Business app on your smartphone and connect your phone to your car.
The Bloomberg Business app, now with Apple CarPlay and Android Auto features. Download it free in the Apple App Store or on Google Play.
Presented by our sponsor, Interactive Brokers.
This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec from Bloomberg Radio.
I got the feeling. Baby, I got the feeling.
Great quarter. Soft landing.
Earnings season's not over yet. That's all I'm going to say.
And listen, more than 80% of S&P 500 companies, 82% of S&P 500 companies issued results that have topped analyst earnings expectations by an average of 7. I know they manage.
Okay, that's called managing expectations.
Like I
Carol.
said, not everybody's running to downgrade stocks to sell.
Yeah, that's a really good point. Did they used to do that more?
They never do that until it's like the stock is down to nothing.
You're like, oh, thanks for the breaking news.
All right, having said that, let's talk a little bit about the soft landing that seems to be happening. Today's CPI report showed U.S. inflation, as we just talked about, broadly slowing last month. And so, despite some bumps in recent months, inflation, Tim, has settled substantially from that 40-year high that was just last year. And it's led several Fed policymakers to signal that maybe they're done raising interest rates.
Okay, maybe. With us more on the data and the impact on U.S. yields, which sank today, we got Bloomberg News economics editor Molly Smith. She's with us in the Bloomberg Interactive Brokers studio, along with Bloomberg Intelligence chief U.S. interest rate strategist Ira Jersey, live from BI headquarters in Princeton, New Jersey. Molly, I want to start with you and just get into the nitty-gritty here. As Carol mentioned, everything is awesome, at least today.
Yeah, great quarter, guys.
Great quarter.
Or great month, really.
Is
October.
It?
Yeah.
Is it, though?
You've
been on Team Soft Landing for a long time.
I have been. Thank you, Tim. I thank you for reminding everybody that I have been. I still am obviously optimistic. I think today gave a lot of reasons to still be optimistic. This was, I think from the Fed's perspective, one of the more, Goldilocks reports that you could get. It showed one of the biggest contributors to inflation in the past few months has been that shelter category and rent. And some of those rent measures stepped down pretty significantly this month. So that was very welcomed. The rents, of course, are still rising, but not nearly as fast as they have been in recent months.
And that's the point. Still going up, but not as much as they were.
Right, which is the same with core inflation, but then you saw overall inflation. That's the one that includes those food and gas categories. That one was unchanged on the month, and that's because gas prices fell so much. So we were expecting that, but the read on core inflation coming in below expectations, that's what everyone is really cheering about right now.
I want to get to you in terms of that 2% rate that's the Fed target in a moment, but let's bring in Ira Jersey, because Ira, we saw, certainly an equity rally, but on the bond side, the Treasury, U.S. Treasury side, some significant moves all along the curve. Talk to us about the trade this morning, today. Specifically.
Yeah, so it's happened all day. There's been pretty decent follow through, actually. And if you look at the belly of the curve, right, the best performing part of the Treasury market right now is the 5-year kind of area of the curve. And that's basically the market saying, oh, this is going to continue. The Fed's going to have to cut interest rates. So this idea of a Goldilocks, I'm not quite sure that's what the market's telling you. That's not what the rate market is telling you anyway. What the rate market is saying is the rate market's actually worried that the growth and inflation story is going to be so bad next year that the Federal Reserve is going to be cutting interest rates. So I have a different read on what the market's telling us. It's extrapolating out, I think, a little bit too much. So I would take this with a grain of salt because it's one day's move. But nonetheless, the market certainly seems to think that you're going to get maybe a string of better inflation data, but maybe significantly worse growth data as well.
Ira, what's the nuance in the trade between the activity indicating recession versus soft landing. How do you figure that out?
Yeah, well, I think in the market, like what the Treasury market had been pricing for a long time, was basically the Federal Reserve to do nothing with a tail risk that they would have to ease interest rates by the end of next year because you'd wind up seeing a recession and slower economic activity. But today they've just leaned into that slower economic activity, slower growth, the Federal Reserve easing. We went from pricing in under 2 cuts by the end of next year to pricing in almost 4 cuts, right? So that's a pretty significant move, right? 50 basis point move. I mean, you just look at where short end futures are pricing, and they've moved basically at least one more cut, if not more, throughout the course of the year. So, my base case is the Fed does nothing next year, but the market seems to be much more worried about, softness in the economy.
So, okay, Molly, so that 2% target that Jay Powell and company say that's what they are shooting for, or that the trend line is getting there, that would maybe give them a reason to pause and just be done with this rate hiking cycle. We still have a ways to go, right?
Yeah, and remember also that 2% target is based on the other inflation metric that we're getting next week. So that's the PCE inflation report. That's the one that the Fed uses for the target. This one today was the CPI. It's a bit more public facing. I think like some people might say this more is a truer sense of what consumers actually pay and representative of more their actual basket. But I mean, yeah, I think the real thing that they've been looking for has been a mediation more in the core metrics of inflation. So stripping out the volatile food and energy categories, especially core services ex housing. So getting into where we've seen so much strength in especially rents and other services inflation that has been really strong. That did step down a bit in today's report, but you still are generally getting so much more relief on the good side, as you guys were just saying, with the luxury watches and other big purchases, that people are just not buying as much physical stuff. But the services side is still where the strength in spending is.
It's been like that for quite a while, Molly.
Yeah, and that is ultimately reflective of what our economy is. The U.S. economy is a service-driven economy that, consumers tend to spend more of their
except for
incomes.
during the pandemic when
right.
it was lockdowns
when
we
there were
only
no
ordering
services
couches and
to
TVs.
be had.
Yeah.
Right, exactly. So now we're shifting back into that kind of normalization. And I think, yeah, it's a great point. It is sometimes really hard to distinguish from the market moves and also from the economic data what is the differentiator between recession and soft landing. And that's why, to Ira's point, you can't read into 1 month of this too much.
Well, that's the thing I would say, a sustained level. And what?
I just would say I think people could push back and say, well, it's maybe 1 month of CPI data, but it's CPI data on top of data that we got, starting a couple weeks ago with the jobs number that came in.
Sure.
Kind of lighter than expected, which gave people the idea, okay, maybe the labor market's not as hot as people thought, and kind of set off this rally that we've seen for the last 2 weeks.
Ken Griffin of Citadel say that labor hoarding, maybe we're starting to see not as much of that, which we had seen for a long time. Ira, come back in here, though. The bond market, the U.S. Treasury market has been very volatile this year. And so I am always hesitant, even when we've got a steep move on a day like today, to buy the trend. How about you? You know and understand this market. I mean, we could get something that's a little hot in terms of the U.S. economy and go in the other direction.
Yeah, I think a lot of people were leaning a little bit short. A lot of people were burned. We had when this past summer, if you recall, when a lot of people, including myself, were calling for the Federal Reserve to have been finished with their interest rate hikes. Usually, when the Fed finishes hikes, you want to own duration, you want to own the long end, own market risk. And what happened this time was people got burned, right? Because you wound up getting better economic data than people thought. You had the September data was pretty strong, right? So surprisingly strong, and that's one of the big reasons why people reset their expectations for the Fed, and you wound up getting that pretty big sell-off during the months of August and September. And then, subsequently, like you mentioned, the last 2 weeks has been great for the Treasury market, right? We hit 5% on the 10-year yield, and then we've done nothing but rally for the last 40 basis points or so. And I think that is, shows you how on edge the market is and how confused the market is about the future path of the economy, because I still have a lot of people telling me, some investors I've spoken to just today were mentioning that they think that inflation next year is going to reaccelerate. Meanwhile, you have the market pricing for cuts. So I think if there's any piece of data that suggests that, hey, maybe inflation will be reaccelerating, you can wind up just going right back the other way.
That's interesting. Hey, Molly, come on back in here. Oh, did you want to?
I'm frightened. The thought of inflation reaccelerating.
It'll keep you busy.
I mean, I guess I could see the thing, and maybe I'm a little partial here. I'm in a somewhat of a home buying journey myself and thinking about, okay, what's a reason that like housing prices could reaccelerate, and thinking, okay, if you start to get mortgage rates coming down, which it seems like we are at or near the peak, that at least in the New York City market, because you can't talk about housing really as a national market, it doesn't exist, that there does seem to be a lot of demand here, and that when there would be more supply coming on, if people start to move when rates come down, it seems like there would be a lot of demand to meet that extra supply, in which case prices could come back up. So I could see that in a housing sense, in the sense that like inflation could accelerate more in that sector.
I totally agree.
It's tough for me to see right now where the opportunities are for inflation elsewhere to reaccelerate. I'm not saying it's not possible, but that's the most obvious one to me that comes to mind.
The housing one, because it's just kind of so tight. It's interesting. Ken Griffin said he expects a U.S. recession in the second quarter of next year.
Scary. He also thinks, though, that work from home is going to make it easier to fire people. Yeah. So, I mean, maybe that'll get the rise in unemployment that the Fed is looking for.
We're all just saying, we're all here today.
Remember how we said Happy Monday?
Okay. Happy
Tuesday, everybody. Great quarter. Great month.
In the studio.
It is really, really tricky. What's the next economic report on your radar, really quick?
Retail sales tomorrow. We'll see how well that does.
The consumer. Yeah, right?
Love it.
Those doing. All right. Always love, love, love. Molly Smith, economics editor at Bloomberg News, right here in our studio. Ira Jersey, our thanks to him as well. Chief U.S. interest rate strategist at Bloomberg Intelligence. It's amazing how expectations of what the Fed is doing are moving so quickly in reaction to all of this. This is Bloomberg.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 3 to 6 Eastern. Listen on Bloomberg.com, the iHeartRadio app, and the Bloomberg Business app. Or watch us live on YouTube.
Carol, think about some of the skills that you need to be a good poker player.
Yeah.
Are you thinking?
Yeah.
Okay. Patience.
Discipline. Ability to read people.
Yeah.
Confidence.
Yep.
Understanding odds.
Yep.
Or odd people. No, understanding odds.
Maybe odd people too.
Taking measured risk. And then I think this is a big one, knowing when to quit.
Yeah, so no question, I think that some of those things, or maybe all of them, what you need to be a good poker player also translates to other areas of life, whether we're talking, in the workplace or out of the workplace.
I love this kind of way of thinking. Erin Lydon is on a mission to use poker to teach life skills to women. She's the president of Poker Power. It's an organization that provides poker workshops to businesses, also individuals, to, in Poker Power's words, quote, teach women critical leadership skills so they can turn any situation into their next big win. She is joining us, Erin, that is, on Zoom from Chicago. Erin, welcome. Nice to have you here with Tim and myself. How are you?
I'm great. Lovely to be here.
Well, it's lovely to have you here. Tell us a little bit more about what you are doing and how you can take what you've learned in terms of playing poker and to really make it apply to women making some really serious advancements in the workplace.
Yeah, actually, the skills that you started with are exactly what we teach with Poker Power. And we have figured out a way to gamify leadership skills through the game of poker. And so it has nothing to do with wanting to get you into the casino or even into that, basement home game where it's all smoky and gross, but it's all about getting women how to think like a winning poker player. And so that's taking risk, it's allocating capital, it's strategizing and problem solving using the skills of Texas Hold'em.
Erin, take a step back, your own experience playing poker and how it kind of got you to this point.
Yeah, so I was not a poker player when I agreed to run this company. And that's an important part of the story. I was surrounded by poker when I was on Wall Street. I was at JP Morgan, and there was always a poker game going on. And I never had the confidence or the courage to ask if I could learn, and I certainly wasn't invited. And so my image of this game was quite negative. And that's just what I was familiar with. Fast forward 20 years, and what I have come to realize about poker is it is the secret sauce. And I have been talking about equal pay for almost 20 years and trying to inspire women to live life differently through thinking differently and strategizing differently. But I hadn't really had a solution that could be tactical, that women could employ on their own to advance their own careers and certainly go for equal pay. Poker is that skill. And the reason that I say that is when you are playing this game, it's communal, it's social, so it's fun, and that's a good thing. That gets people to come back to it. But two, it's a place to practice. And I think that's what's been missing, is that in order to negotiate well, in order to seek that promotion, you have to practice the courage and the confidence and the competence. And poker, game after game, gives you that opportunity.
But do you have data that show that it's actually working for the groups and the individuals you work with?
Yeah, we have tens of thousands of women over the last 3 years who have gone through our programs, which are both virtual and now in person. We love doing in person with our cohorts. And what we know from these different groups, and they're all ages, they're interns all the way to CEOs, is that it's learning to think like a winning poker player translates to asking for that raise, asking for that promotion. And what we see is through their testimonials is that we're hearing stories around doing just that. And people are getting outside of their comfort zone, which may not sound like such a big deal, but it is absolutely critical to have the courage in order to do that. We're actually running a couple studies. So you asked about data, and we're big on data at Poker Power. We're actually doing a study with Northwestern and also with Harvard. And we're going to put numbers to exactly what I am saying.
What is it about poker versus, I don't know, car racing or some other sport? What is it about poker specifically that gives you the skills? And I guess, and do you have to get to a certain expertise in terms of playing poker, or is it just doing it over and over in order to be able to then start applying it in the workplace?
So what I like to say about poker, and I used to race cars, so I love that analogy, but the reason it doesn't work is that to be an amazing car racer, it's a physical skill. It's mental, certainly, but it's a physical skill. Poker is different. And while you need to have stamina to stay at a poker table, what you really need is your mind. And so it's the ultimate meritocracy. And that is incredibly empowering for women to be able to sit down at a table. And it doesn't matter how big, tall, strong they are, how fast they are, none of that matters. What matters is how they play their cards. And so I think it's actually, the greatest leveler to help women take what they can from the poker table and start to apply it to real life and to workplace. And what we like to say is there's some number of hands. And so I think it's about 100 hands of play for you to really start to understand the rules of the game, the position that you play in the game, and how your stack of chips factors into the game. Those are sort of the key elements that you maneuver hand after hand. After those 100 hands, I say, you can go play in a charity tournament and you will not be the first person to bust. And the reason that matters is we need more women sitting at the table at those charity events, because right now it's almost all men who are playing the game. And that's where the deals are getting done, and that's where the networks are formed.
We have like 30 seconds left, but I want to make sure we understand how the business works. How much does it cost to actually get trained by you guys?
Yeah, so you can enroll in virtual classes today. We have them starting at the beginning of every month, and it's $50 for 4 classes. So we feel very strongly about not having barriers to entry. If you would like to work with us as a corporate partner, you should reach out directly to me and the team, and we will create a bespoke experience that is one of a kind for your clients, for your internal employees, and for the different women cohorts that you'd like to work with.
Really interesting. All right, Erin, thank you so much. Erin Lydon, she is the president of Poker Power, joining us on Zoom from Chicago. Interesting.
So I guess there is hope for me.
What, you gonna go play poker now?
Not good. I'll say that.
Why? Oh, for playing poker?
I'm not good at poker. Yeah,
well.
But all it takes is 100 hands.
More the roulette kind of guy?
No, I don't do any of that stuff. I'll tell you my Vegas story at some point where I lost a lot of money and
a
just
Vegas
never
story.
Gonna do it again. Yeah.
Always are good stories. All right, this is Bloomberg.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 3 to 6 Eastern on Bloomberg Radio, the Bloomberg Business app, and YouTube. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Texas, Canada, El Paso, and Oklahoma down to Old Mexico, and there's Houston, Dallas, Austin, and San Antonio.
Yes, folks, we're taking you to the Lone Star State, and you might recall last month, Ken Paxton, he's Texas's embattled Republican Attorney General, threatened to bar about 8 banks from municipal bond deals in Texas simply because of their commitment to cut greenhouse gas emissions. It's a conflict that dates back a few years to 2021 when the Texas legislature enacted a pair of laws because some lawmakers saw big financial institutions as too woke when it came to oil and guns. That's what it really came down to.
Well, Let's go to the most recent threat, which was last month, and it spurred concern on New York trading desks about losing access to the state's $50 billion a year debt market, where business is booming even as high interest rates crimp deal-making elsewhere. After all, as Attorney General, Ken Paxton signs off on almost all muni bonds issued in Texas, so his approval is key to infrastructure financing in the state.
All right, Amanda Albright and Danielle Morin wrote about it for Bloomberg Businessweek. The story in the upcoming new issue of the magazine. It's on newsstands later on this week on Thursday, but it's already online at bloomberg.com/businessweek and, of course, on the Bloomberg terminal. Amanda, by the way, is municipal bonds reporter for Bloomberg News. She's with us on Zoom from Kansas and also here in our Bloomberg Interactive Broker studio as the editor of Bloomberg Businessweek. Joel Weber, feels like a Texas showdown.
And it's one that's been going for a while, only it seems like, once you're, in this kind of situation with the Attorney General of Texas, Paxton, first of all, he's had some legal issues of his own. So once he got through those, it turns out that he couldn't quite turn away from this one.
Yeah.
And this showdown continues, and it's all about municipal bonds, which he signs off on, and that has created some tension with Wall Street.
Amanda, come on
Exactly.
in. Yeah.
No, I was just going to say, my coworkers and I, the big thing we've been saying the past month is that we just can't believe that we're still writing about this in such an in-depth way. These laws were enacted 2 years ago. So that's over 2 years of kind of drama in the Texas muni world over these laws. There's a law targeting firearm policies, and then there's a law targeting energy policies. So the latest kind of drama is more about energy policies. And so Paxton back in office, a few weeks back into office, some people were hoping maybe he kind of forgot about these laws. He released a list of banks that he's reviewing for their basically their climate change policies and their commitments that they've made around greenhouse gas emissions. So we've seen a pretty dramatic reaction among the people that we talk to regularly for these stories. They seem pretty rattled by this, and I'm happy to talk through some of the specifics of it. But
let's do that, because ultimately, Texas is known for having a business-friendly environment. This kind of puts it in a place where it might not get to last that long.
Absolutely. And earlier this month, Jamie Dimon made unprecedented comments in the world of SB 13 and SB 19, saying that, he wants Texas to remain a welcoming place for business. Obviously, JP Morgan has invested heavily in Texas, but the fact that he was willing to comment about these laws and the impact that they're having shows that this is a really big deal to businesses, especially because a lot of them have gone all in on Texas. And within the muni space, Texas is growing. School districts are selling bonds constantly. They're doing, billion-dollar ballot initiatives so they can add new school buildings and stadiums. So Texas is really where the action is at in munis. So that just makes all of this all the more painful for the muni bond desk at, say, a JP Morgan, where they can't, well, it's complicated with JP Morgan, but it makes it harder for them to work on transactions right now.
Hey, Amanda, I want to talk about Ken Paxton, because this is a guy, an attorney general, who has come under a lot of pressure over the last couple of years. And there was a time not so long ago that perhaps the CEOs at the biggest banks in the U.S. thought they wouldn't have to be dealing with him anymore. Just give us a rundown of AG Ken Paxton, who, by the way, I think a lot of people might have heard of for the first time if you live outside of Texas, maybe during the controversy post-Trump losing the 2020 election.
Absolutely. So he's definitely a rising star in Texas, and everyone kind of wants to know what his next move will be, whether it's, running for governor, running for Senate. And so he's also a man of mystery in the muni bond market, a man of that people have really focused on, because he has this role that is very unusual, where he can sign off on muni bond contracts and some other types of contracts too, it seems like. And so he actually did an interview also this week about the laws, and he sort of downplayed kind of a lot of people see him having a very heavy hand in enacting these laws and implementing the laws and doing these reviews of policies. A lot of people within Texas see him having a heavy hand. But in this interview, he talked about how he's just following the Constitution. He's following the law. The legislature is the entity that enacted this law. And so he's just sort of doing his job, so to speak. But a lot of the people we talk to in Texas see it as a very it fits with him being more conservative, and they see it as kind of being a very intense, for lack of a better word, a very intense way of implementing the laws because, for example, this list of banks that he's reviewing more recently, there's a lot of well-known American banks that are very involved in munis, very involved in state and local finance, whereas the comptroller has his own list. He's also a Texas Republican. But he released a list of banks that aren't so involved in Texas government contract work. So that list was seen as like a little more moderate, a little less splashy. So if that's kind of inside baseball, but there's two big Texas Republicans involved in implementing the law, basically, and carrying out the law. And they've taken two very different approaches.
And as you point out in your story, Paxton was suspended from office back in May as he faced impeachment over allegations of bribery and corruption. And his suspension ignited hopes in some quarters that interest in those laws that you've been referring to would quietly fade away. But we should note the state Senate acquitted him back in September, and he quickly said he would review whether the lenders that join the Net Zero Banking Alliance will be allowed to underwrite muni deals in Texas, Joel.
Good summary there, Tim. Thank you.
I was reading directly from
exactly.
Amanda's story.
Good reporting, Amanda.
But it's like, it's all Amanda.
It is this, thing for Wall Street, I think, where, I mean, there's a significant amount of business at risk here.
$50 billion.
Yeah. And basically it comes down to sort of a little bit of a grudge match between how Texas wants to do its business and how Wall Street does its. Okay, Amanda, worst case scenario here. How bad might this get for Wall Street?
I think it could get pretty bad. We have 8 underwriters who are on the list. I did like some quick math. I think the last I checked, those 8 banks have underwritten like 14 billion of the 53-ish billion, might be more now, but 1 in 5 deals, if that's easier, in Texas is essentially underwritten by one of these banks. So if you keep knocking off banks, it makes it harder and harder for municipalities to find a lender to work with at a attractive price.
And what kind of projects could become at risk when we start thinking about that at scale?
I think about school districts, because school districts are selling so much in bonds lately because people are moving to Texas, they're moving their families there, and school districts are really like from the ground up being built through the bond market. They're constantly hitting the market with sales. I really think school districts are the ones that are probably most at risk because they're the most active at the moment.
Our chief curmudgeon correspondent
not
wants
a
to weigh in.
curmudgeon. I'm just saying this is going to cost taxpayers ultimately.
Well,
right?
that's where
this is the idea.
That voice you hear is John Tucker.
I'm with you on this, because doesn't this lead to, Amanda, higher financing costs for deals?
Yes, there's been studies, or there's a really prominent study that shows that in Texas specifically.
So, I mean, ultimately, you do wonder, are they not going to be able to get, maybe they're not going to be able to afford as many projects to do because their financing costs are going to be more expensive.
You know what, though? It's Texas. Like, this stuff,
everything's big.
You just turn it into, some kind of culture war and hope it kind of blows over along the way, And Ken Paxton has shown again and again and again that he has a way of kind of, galvanizing his base around stuff like this. So, and, taking on Wall Street, yet another way of, those guys not in this state.
Totally. I think the thing that interests me about it, and this definitely to me shows the anti-ESG war is not going away, but to me, it's not a kitchen table issue that like your grandma cares about. So I am really curious about the politics of why this is, the issue that he's really been harping on, because to me, it doesn't necessarily seem like something everyday people don't tend to care that much about bond issuances and who's underwriting their city's bond deals. So it's one of those weird things where I'm still trying to figure out.
Unless your taxes go up to pay for it, right?
Yeah.
Like that's when all of a sudden you sit up. I mean, I live in an area where all of a sudden, the Board of Education couldn't pay for everything. And, they can just randomly add it. So like things like that start to get noticed.
Wall Street makes a good foil too, right? And like
That's a good point.
The whole ESG DeSantis thing, like he showed that there was a way to weaponize this, and Paxton's savvy enough to find new ways to do this too.
The other thing I do wonder though, Amanda, is like, doesn't Texas though have to have relationship? I mean, Citi's out, right? Goldman's out. Don't they want to have relationship though with some of these really big Wall Street banks?
Yes, and I think I think I said this last time on your show, but if people want to talk about this, always call me. So I do think mayors in Texas and city finance officials, if you talk to them, maybe more privately, maybe not for a quote in Bloomberg News, I think they would tell you that they think this is really frustrating and they would like to work with whatever bank is the best to work with, the easiest, the cheapest to work with. And they really kind of also want this to go away, but it's difficult getting folks to talk about this. That kind of comes away from our piece. It's been difficult getting folks to talk about this on the record because it is such a divisive environment, and people, because he has this power over contracts, people don't want to upset him. So
that's a really good point. Every single Muni deal in the state he signs off on, right, Amanda?
It's remarkable.
Exactly.
Yeah. So I mean, like, this is kind of your nightmare where your business, your bonds have ended up in this place where they're part of the culture wars. Hey. Remember when we talked about the culture wars?
Yeah,
like this
exactly.
is it in reality, and there's kind of no escaping any of it in the U.S. now.
And is there an attorney general with more of a national profile at this point than Ken Paxton? I don't know if there is, and I think that's why Amanda, referred us to, like, okay, a lot of people are looking, what's his next move here?
Well, and he's proven to be Teflon when you have 16 counts and acquitted on all of them, right?
Yeah.
So that was a really interesting case study for Texas. So I think we'll be talking about this again. Probably.
Well, and I do want to.
Culture wars don't go away.
Is it just so I'm told. We live in it, right? Amanda, are there any?
Did I mention there's an election next year? Yeah.
Are there other states that are facing this? Because I do feel like the ESG pushback, we see it. Is there other states, or no? Is it really just a Texas thing, especially because of the potential, the size of their market?
Well, I actually think Texas might be leading the way on this, Amanda. Right? Like, and it might just be like, how does Paxton navigate this? Because if other states are watching this, especially red states, like this could provide a little bit of an example for how to navigate this.
Absolutely. I mean, West Virginia and Oklahoma actually enacted similar laws. The minutia of the laws differs among states, but Texas really led the charge. We already saw other Republican states follow suit. The firearms law hasn't caught on quite as much as the energy one, but energy was an issue, especially with concerns about Russia. It got a lot of traction, especially I think last year. So Texas really leads the way on the anti-ESG war, and there's definitely chatter that these fair access laws, that's what they're known as, that kind of are all-encompassing culture wars issues that use government contracts as like the weapon. There's a lot of chatter that we will continue to see traction on these next year as state legislatures go back into session. So it really seems like this isn't going away anytime soon.
Remember when just like everybody just jumped on the ESG board, like, and states, cities all wanted to be a part of it in terms of their investment portfolio.
I think that's when stocks were at record highs day after day, Carol.
Right.
Yeah. So and to bring it back to the schools part, because I think that is a really interesting observation, and the fact that taxpayers are potentially going to feel this. Like, I remember like the story that we talked about in the Culture Wars package was the homeschooling one, right? Like, this is already playing out, and people are seeing how it's playing out, and they're kind of taking control of their decisions and doing things that are, in some ways feel radical compared to where the mainstream has been. But like, that's where we go when we enter a fractured kind of landscape.
But just like with that story, Joel, this feels like another reason why someone would choose to live somewhere and not somewhere else. I mean, these states are becoming their own fiefdoms.
Well, that's also the point of America, right? Like, there are
Federalism?
50 states. Yeah, and the states are entitled to do something that's different than what they.
Else.
Yeah, exactly. So this is America, and like we're living through it.
That's why you end up with red states.
Just
and
a big,
states.
American experiment.
Texas, man. All right, Amanda, thank you so much. Amanda Albright, municipal bonds reporter for Bloomberg News there in Kansas, and of course the editor of Bloomberg Businessweek, Joel Weber, here in our studio. Check it out. Like we said, this is going to be in the upcoming new issue of the magazine on newsstands on Thursday. Find it there already online at Bloomberg.com/Businessweek, and of course on the Bloomberg terminal. This is Bloomberg Radio.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
You drive, say you crazy.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, everybody, just about 17 minutes away from quite a rally on Wall Street. Haven't seen this in some time. We've also seen, as John just broke down the numbers, quite a drop back in U.S. Treasury yields all along the curve. But we are pretty much just off our highs of this session, so just backing off a little bit. But nonetheless, really, we've held on to these gains really throughout the day, Tim.
Yeah, curious what Dan Griffith, Senior Vice President and Director of Wealth Strategy at Huntington Private Bank, has to say about all this. Dan is here in our Bloomberg Interactive Brokers studio. I want to get to the survey that you did in just a few minutes, Dan. But first of all, give us an idea of where you're thinking about inflation going, if you think the Fed is done after today's print, because this is kind of a monster rally that we're seeing.
It's a great day, and I'm glad to be here.
Unless you're short the market, it's not such a great day.
That's true. That's true. I'm sure there's always a few losers out there, right? But I think for the most part, this is going to be good news for a lot of people out there, and we're glad to celebrate with the people who are good to be there and seeing good news. We hear a lot of good news, as we'll mention in a little bit, from our clients, but we think that inflationary trends, are starting to moderate. I think we got some great news earlier this week that demonstrates that that'll be the case, and a lot of the conversations we're having with real business owners and our clients demonstrate the fact that they're starting to feel a little bit better about that. So we're thinking, we think through the end of this year.
Feeling better about what? Inflationary trends?
That's
correct. We're way down from where we were a year ago.
Significantly so. Yeah, I think one of the other things that we're experiencing is this phenomenon that a lot of people haven't yet experienced some of what's the consequences of the rate hikes. If you haven't bought a new car in the last 2 years or a new house in the last 2 years, if you haven't carried credit card debt in the last 2 years, then really this inflationary thing is just a headline as opposed to something that's hit your pocketbook. Now we're starting to see that happen.
That's 0.0001% of the population.
Right. That you're exactly right. You're right. So I think we're seeing now many, many more people are starting to say, hey, I'm seeing a change because I've had to move or buy a new car and go from there. And I think that's why we think inflation will start to decrease.
Your business clients, are they talking recession? Ken Griffin of Citadel thinks it's a second quarter 2024 thing.
We're at about 55% risk of recession in 2024. I will say that...
Is that high or a lot for you guys? Or what?
It's actually been pretty consistent. We think it's about 50-50 broadly. We were there all last year, and I think the market was out ahead of us and kind of came back to where we were. Part of what we're experiencing is when we talk to our clients themselves, we say, how do you feel? What does it look like? 60% of our clients that we recently surveyed said, we actually feel like we're going to have a better year next year. More than 60% of them said that 2023 was a better year than they've had in a very long time.
These are small business clients? Or
That's
what?
right. Yeah, small business and middle market clients. So a lot of them are still very optimistic. Only about 8% of them had a negative outlook on the economy. And I think that's very telling and one of the reasons that we're in the position that we are.
Based on the survey data that you got, do you think there's a more than typical disconnect between what we're seeing in the stock market and what you're seeing in the economy, with the caveat that we know the stock market is not the economy, but they're certainly related?
Yeah, I do think that's one of those things that we're realizing more and more, right? That the markets themselves can be very different than what we see. I think we see that phenomenon in small and mid caps themselves, right? As we see there's a disconnect between the large cap space and small and mid caps. But I think the nimbleness of the middle market client, the ability for small businesses to kind of adjust to supply chain disruption, a lot of them being able to turn around and say, hey, we're going to go ahead and adjust and make evolutionary changes. It's panned out. And as a result, I think we're going to end up with an economy that's a lot stronger, especially in that middle market space.
All right. Having said that, a client comes in and has some money to put to work. One of the names that you like is ExxonMobil. We know they did the mid-October deal buying Pioneer Natural Resources, shale oil play. We get it. Is that a reason why you want to buy it, or is it something else? Is it the dividend? What is it?
Yeah, I think the dividend is one. It's an interesting phenomenon. A lot of our clients come in and say, hey, we really want to talk about these higher yields and how we can lean into fixed income a little bit more. And then they realize, well, if I'm giving up the opportunity for some upside and I'm giving up some really potentially beneficial dividends, and Exxon's a great example of that, right, where they can still catch some upside. I think because of their miss earlier, a lot of clients kind of feel like they're on sale a little bit, and so they're happy to get the large dividend and happy to get potentially a little bit of something on sale, and that's one of the things that they're excited about. They're a leader in the Permian Basin. I think the consolidations that they've done are going to be very beneficial from a growth standpoint as well.
Well, I don't want to say speaking of on sale, because that's absolutely not what's happening with Microsoft today.
Yeah.
No, that's right.
Another record high for the company, up 54% so far this year. It was last week that it hit an all-time high as well, Carol.
Yeah.
What are you thinking when it comes to Microsoft? Do you think there's still room to run?
We do. And it's kind of funny. I mean, some of these names like Exxon and Microsoft, they're names that people have thrown around a lot and they've done really well. But we think, again, Microsoft has done a lot and there's still upside. The work that they've done in the cloud computing area is one that we think there's still room to run there too. And obviously their growth in the gaming area is one that we're also following. So I know how much people at my house play certain games like Minecraft. If they figure out a way to monetize that, and I hope that's after my kids are gone, that could be a definite
but actually, serious question though, are your kids, do you think they're gonna go from Minecraft to Xbox games that do cost money and have all the in-game purchases?
Not if I can help it, but yes,
but
I think
does it seem
there
like
is
kind
a
of
risk of that.
Like
yes,
there's a gateway there?
I think for sure, yeah. And obviously there are ways that they can figure out how to monetize that, even if it's not purely fun kind of games. I'm sure that there'll be creative ways to look at that.
You're fine. Minecraft's educational.
John, you're a Minecraft master, aren't you?
No, of course not. Don't let your kids do video games. That is my advice to you.
Listen, I've always
don't go down that path. God's
I always
sakes.
think about all the tech entrepreneurs and doing panels with them years ago, and they're like, yeah, my kid doesn't, they're not on a phone, they're not on I think
there's a difference
laptop
between
or
the
something.
phones and video games. I think phones, a lot of tech executives draw the line with phones, but they're okay with gaming.
Really?
I think gaming is totally acceptable.
Here's one of the weird things. It's this is big. Kids watching other kids play games.
That's been huge. That's like 15 years, John
That is
Tucker.
also definitely
Twitch.
something
That's psychotic,
that
I think.
Yes.
But it's just
and there is a way to,
Twitch.
YouTube has figured out how to monetize that for sure, John. So that's definitely a factor.
Yeah. Don't you remember watching people play Pong, John?
Well, yeah, I was a huge Pong player. I'm still
Poker?
pretty good at it.
Poker?
No, just Pong.
Pong.
I said.
You're still playing Pong.
Space Invaders.
Oh my God. Always get some perspective. Dan Griffith, thank you so much.
Thank you all.
Nice to have you in studio. Senior Vice President and Director of Wealth Strategy at Huntington Private Bank here, as we said, in our Bloomberg Interactive Broker Studio.
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 3 to 6 Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.